Welcome to today's webinar, Families First Coronavirus Response Act, Employer Tax Credit. This following webinar that RSI is providing regarding the passage of the Families First Coronavirus Response Act is solely for the purpose of helping you understand how the benefits you select will be applied. It is not legal advice and should not be relied upon as such. Under the FFCRA, an employer will be allowed a payroll tax credit to offset their federal 941 each payroll in an amount equal to 100% of the qualified emergency paid sick leave paid to employees. What is a federal 941 payment? This is a payment that is made to the IRS 3 to 5 days after your payroll check date, includes employers and employees' portion of Social Security and Medicare taxes and federal taxes withheld from your employees. A quick example. You have a federal 941 payment of $1,000 on a payroll, and you paid employees $800 in paid leave, emergency paid leave. You subtract that $800 in emergency paid leave paid to employees, subtract that from the federal 941 payment of the $1,000, and you are only to pay the IRS $200 for this payroll, even though you incurred a $1,000 941. The paid leave could be thought of as a prepayment for the 941, or the same thing as a 941 payment. Now, wages taken into account for the payroll tax credit. The amount of wages considered to calculate the payroll tax credit shall not exceed $511 per day and $5,110 in total when an employee takes leave for one of the following reasons. The employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. The employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. The employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Remember, the max hourly rate that can be entered is $63.85 for this type of leave. Do not enter a rate that's higher than $63.85 when paying your employees. The amount of wages considered to calculate the payroll tax credit for each employee shall not exceed $200 per day and $2,000 in total when an employee takes leave for one of the following reasons. The employee is caring for an individual subject to a federal, state, local quarantine or isolation order, or is caring for an individual that has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. The employee is caring for a child at the school or place of care of the child has been closed, or the child care provider of such child is unavailable due to COVID-19 precautions. The employee is experiencing any other substantially similar conditions specified by the Secretary of Health and Human Services. This is kind of a catch-all. Remember, the max hourly rate that can be entered is $25 for this type of leave. Please do not enter a rate higher than $25 when paying your employees this type of leave. For each employee, the maximum amount of hours that can be considered for the payroll tax credit shall not exceed 80 hours, and that's both combined for reasons 1, 2, 3, and reasons 4, 5, 6. One of those leave rule has a capped hourly rate at $63.75, and the other leave rule has a capped hourly rate at $25. Anything paid beyond 80 hours is not eligible for the tax credit. Additionally, amounts paid above the max set hourly rate are also not eligible for the tax credit. For this information, you see question number 34 in the Department of Labor's frequently asked questions in the link down there. Emergency paid leave under FMLA. An employer will be allowed a payroll tax credit to offset their 941 payments each quarter for an amount equal to 100% of the qualified emergency paid leave under FMLA paid to employees. For each employee, the amount of wages considered as qualified emergency paid leave under FMLA shall not exceed $200 per day, or in aggregate $10,000 for all calendar quarters. The max hourly rate that can be entered is $25 for this type of leave. Do not enter a rate higher than $25. For each employee, the maximum amount of weeks that can be considered to calculate the payroll tax credit shall not exceed 10 weeks. Now, RSI has globally added the necessary job codes to all clients' payroll in order to capture the necessary information to calculate the payroll tax credit. This enables you to immediately realize the associated tax benefits and retain as much money in the bank during this time while compensating your employees. Additionally, there are some more payroll tax credits under the FFCRA, Medicare tax paid. RSI will calculate this portion of the payroll tax credit on each payroll. And I should say the Medicare tax paid on paid family leave. This portion of the payroll tax credit will increase the credit by 1.45%. Example, if we have paid leave of $1,000, the portion of this tax credit is 1.45%. That's the percent of Medicare tax. So we take the $1,000 payment, we multiply that by 1.45%, and we get $1,014.50 tax credit. Qualified health plan expenses are also an additional payroll tax credit under the FFCRA. Expenses incurred by an employer to provide and maintain a group health plan as long as the amounts incurred are excluded from an employee's gross income. That means they have a pre-tax deduction. Please consult your benefits provider to inquire if your health insurance qualifies for this exemption. In order to take this credit on IRS Form 941 at the end of each quarter, you will need to communicate to RSI through support requests the amount of credit that is associated to qualified health plan expenses. Refund of credit. If, for any quarter, the total payroll tax credit is greater than the total amount of federal 941 payments, you will receive a refund for the difference. This includes emergency paid sick leave, emergency paid leave under FMLA, Medicare taxes on those wages, and qualified health expenses. All of those go towards calculating the total payroll tax credit. Example, if we had a federal 941 payment before the tax credits in the entire quarter, so basically a 941 liability of $31,000, and the business payments in emergency paid sick leave, emergency paid leave under FMLA, Medicare taxes on those wages, and qualified health plan expenses equal $40,000, you will have a refund from the IRS of $9,000. You get a dollar for dollar reduction of your 941 liability payment for all amounts paid under this paid leave up to those maximum amounts. Record keeping. RSI has an emergency paid sick leave payroll tax credit tracking report. For tracking paid leave and the payroll tax credit will be found under Financial Reports, Payroll tab, Families First Coronavirus Response Act, Emergency Paid Sick Leave Payroll Tax Credit Tracking Report. That is a new report that will be available so that you can see in one shot how much you've paid all your employees. A type of emergency paid leave. This is very important. If you intend to claim a tax credit under the FFCRA for the payment of the sick leave or expanded family and medical leave wages to an employee, your employee must provide adequate documentation to support their claim for the need to take paid family leave under the FFCRA. You are not required to provide leave to your employees if materials sufficient to support the applicable tax credit have not been provided. You can find that information on question number 15 at the DOL FAQ website listed right there. If one of your employees takes expanded family and medical leave, that's that 10 weeks, to care for his or her child whose school or place of care is closed or child care provider is unavailable due to COVID-19, you may also require your employee to provide you with any additional documentation in support of such leave. Of course, to the extent permitted under the certification rules for conventional FMLA leave requests. An example of this type of documentation could include a notice that has been posted on a government, school, or daycare website, or published in a newspaper or in an email from an employee or official of the school, place of care, or child care provider. Once again, you are not required to provide leave if materials sufficient to support the applicable tax credit have not been provided. If Find this under question number 16 at the DOL FAQ website listed right there. Please note, we are still waiting on guidance from the IRS for the following. The accelerated payment program, that's when your payroll tax credit is greater than your 941 payments. The IRS is implementing a program to get you a refund as quickly as possible. And in most cases, it will be in your bank account in less than 2 weeks. And RSI is also waiting on guidance from the IRS for record-keeping requirements. All alerts can be found on the following URL. Please direct all questions via support request to RSI Compliance.